Hi, I'm Professor Jeremy Michels. I'm excited to share with you today some of my research from a paper titled Retail Investor Trade and the Pricing of Earnings. In this paper, I examine how increasingly active retail investors affect the way and speed with which prices incorporate information related to fundamental firm performance. While the prior academic literature explores the behavior of retail traders, we've seen a dramatic increase in recent years in the trading activity of relatively inexperienced investors. I measure the trading activity of this demographic of investors with positions held by investors on the Robinhood trading platform. My results show that these investors react when firms announce their earnings. However, these firms don't react directionally to earnings releases. That is, they don't simply increase positions when firms announce good news and decrease positions when firms announce bad news. Instead, they seem to respond to the visibility of earnings news, increasing holdings when firms announce either good or bad news. Further analysis suggests this result is driven primarily by Robinhood traders responding to price movements in the stock market caused by earnings releases, as opposed to the underlying earnings release itself. Finally, I find that trading by Robinhood investors is associated with stock returns following the earnings announcement. For more extreme earnings news, both positive and negative, prices drift upward following the earnings release for firms with the greatest increase in Robinhood holdings at the earnings announcement. I find this result is concentrated in smaller firms or firms that are costly to sell short, consistent with price pressure from Robinhood investors underlying this result. These findings can help us understand how increasingly active novice investors trade, which can help firms shape their disclosure policies and inform regulators as they consider policies aimed at these investors.